Well, yesterday was one of those days where investors seem to have plenty to worry about all at once. Hey everyone, it's Thursday morning, July 30th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. All right, let's get started. U.S. stocks had a rough session after the Federal Reserve decided to leave interest rates unchanged. But what really caught investors off guard was that 3 Fed officials actually voted for another rate hike, showing that inflation is still making policymakers uncomfortable. The Dow Jones lost more than 1,100 points, while the Standard & Poor's 500 and the Nasdaq also finished sharply lower. Higher treasury yields, rising oil prices, and another sell-off in semiconductor stocks all added to the pressure. Speaking of oil, prices jumped back above $90 per barrel after renewed tensions in the Middle East. That immediately raised fresh concerns that higher energy prices could make the inflation fight even more difficult. Now, the big story after the closing bell was earnings. Microsoft delivered another impressive quarter. Revenue climbed to $90 billion, earnings comfortably beat expectations, and investors liked what they saw, pushing the stock higher in after-hours trading. Meta also reported stronger than expected revenue, growing 28% year over year. But profits declined, and despite beating revenue forecasts, investors focused on weaker profitability, sending the stock down more than 5% after the market closed. So, once again, we're seeing a familiar pattern. Strong AI-related growth alone isn't enough anymore. Investors increasingly want to see that massive artificial intelligence investments are translating into stronger profits as well. Today, markets will continue digesting those earnings results while also watching whether higher bond yields and elevated oil prices remain a headwind for stocks. All right, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. See you tomorrow morning.